Jesse, living here in the U.S. as investors, we tend to be a little bit biased towards the S&P, and the last decade or so has been obviously really strong for the S&P, but last year was pretty strong with the international side. I mean, can that continue?
Yeah, so the international effectively doubled the S&P last year, up 34 versus the S&P up about 16 and a half,
17,
something like
somewhere
that,
in there,
right?
yeah.
And some of that gets attributed to a weaker dollar.
Yep, which is in orange.
Which is in this chart. The first
Right.
chart we're showing, orange is the dollar, and most of that dollar fall happened earlier in the year, and yet international markets continued higher. If we go into a very short 2026 so far, the dollar has risen, and yet international markets continue that momentum. So I would say that there is absolutely opportunity that the that the international markets continue to have some strength.
Yeah, this last chart here shows the U.S. in blue and then everything else in orange. And what you'll see is there has not been a whole lot of international outperformance recently.
And that swings tend to happen for periods of time, consecutively.
But the question is, with the U.S.'s monetary policy, with just overall how the dollar reacts, I mean, you could see a tailwind for international stuff. Plus, the international side, not that being cheap versus being expensive is necessarily the only guide in what's going to work, but the international side is cheaper than
not
the
always
United
a
States.
timing thing, but it is a cheaper buy right now. And just another thing that you've been big on is AI playing into industrials and financials, of which Europe especially has a lot more of.
But yeah, a lot of both, and ultimately, I mean, there's no guarantee. We'll see. Who knows? But it looks like the trend is on the international side.